viewers, I'm here to show you about my stock account and market updates today. As emerging bond interest rate rise and dollar bond sales plummet, investors turn to financing channels such as syndicated loans. Emerging markets are trying to reduce zero reliance on the dollar, which is already reflected in bond sales. As global bond yield surged to multi-year highs, emerging market bond sales fell to their lowest level since 2021 in August. Emerging market dollar sales were just $1.4 billion in August, compared with $4.5 a year ago, and well below the January-July average of $15.4 billion, the data showed. Tightening global conditions are prompting investors to seek alternative financing options such as syndicated loans, saving-linked securities, and local currency bonds. These tools can reduce government borrowing costs while minimizing exchange rate risk and refinancing uncertainty. Sergey Goncharov's fund manager at Vontobel Asset Management in New York said, as emerging market issue fewer dollar bonds, are turning to other options, regional banks, supranational banks, and the local currency bond markets. As a result of the sharp decline in emerging market dollar bond sales, alternative lending instruments are becoming increasingly popular, attracting more investors pursuing priority environmental, social, and governance goals. Gabon this month completed a $500 million debt nature swap agreement to help refinance some of its debt and raise funds for marine conservation. Belize, Barbados, and Ecuador have reached similar agreements. However, agreements are naturally are complex and require lengthy preparation by issuers. Borrowers in desperate need of funds opt for syndicated loans, which are financed by multiple lenders. In Africa alone, 225 such loans were granted to government and businesses last year, over $32 billion. Bartosz Sawicki, market analyst at the Polish fintech company Konosia, said market conditions will remain challenging, especially for the most vulnerable emerging market. Therefore, the popularity of syndicated loans is likely to prevail, and it can spread the risk of default between parties. That's all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.